Hello, today is June 14th, 2025, and Josh DeLozier Investments just making a quick video of 5 stocks to buy Nonstop in June of 2025. We're going to cover a few stocks. We're going to do a deep dive into GameStop, ticker symbol GME, Walmart, ticker symbol MWT, Costco, ticker symbol COST, Carvana, ticker symbol CVNA, and Blackstone, ticker symbol BX. GME is currently trading at $22.34 a share, which is near the bottom of its trading range. It just had earnings, and the stock was trading at over $32 a share at one point. It's now is a great time to pick up shares of it. It shows net sales down 16.9% year over year to just 732.4 million, reflecting ongoing retail headwinds and a shift in consumer preferences. The company is aggressively repositioning, divesting from Canada and France to focus on U.S. operations. GameStop's cash reserves have soared to $6.4 billion, up from $1 billion a year ago, largely due to a $1.5 billion convertible debt issuance and a bold 140 million Bitcoin purchase. Collectibles are now account for 28.9% of revenue, up from 15.5% last year, signaling a pivot toward pop culture driven products. GameStop's performance, it has adjusted operating income of $27.5 million, but GAAP results were weighted down by $35.5 million in impairment charges. U.S. operations are profitable, but international segments have been a drag. The company reported net income of $44.8 million in Q1 of 2025, a turnaround from $32.3 million loss in Q1 of 2024. GameStop's strategy, its high cash position provide flexibility, but its bet on Bitcoin introduces volatility and risk. The shift to collectibles is promising, but faces stiff competition from large retailers like Walmart and Target. Investors should watch for sustained improvement in core operations and a scalability of the collectibles segment. The stock remains high risk, high reward, trading near its 52-week low, as I mentioned before. Long term, that Bitcoin investment should pay off big time. Its earnings per share is 46 cents. It's now profitable, where GameStop was actually had a negative EPS, probably about 18 months ago. So we're continuing to see much improvement there with GameStop. Its P is 47.99 with a forward P of 33.04. CEO Ryan Cohen has done an amazing job making GameStop profitable. I think GameStop has a ton of upside, and Josh DeLozier Investments is going to advise a strong buy at $22.34. The next stock is second on the list is Walmart. It's currently trading at $94.44. It's just trading just slightly off its 52-week highs of $104.76 a share. Take a quick look at Walmart. He remains a defensive giant with total revenue up 4.1% year over year to $681 billion in fiscal 2025. E-commerce is a major growth driver, with U.S. e-commerce up 20% and global e-commerce up 16%. Walmart's physical footprint is a core strength, but its digital transformation is now deeply embedded, with e-commerce exceeding $100 billion in annual sales. Membership services like Walmart are gaining traction, adding recurring revenue streams. So just looking at the operating income, it grew 8.3%, outpacing revenue growth and indicating improved efficiency. Comparable U.S. sales rose 4.6%, slowing resilience even as consumer spending tightened. The strategy, Walmart is well positioned to weather economic slowdowns to its scale value proposition. The company's focus on digital integration and membership growth should continue to drive stable long-term returns. Take a quick look at the earnings per share of $2.33 with a P of 40.51 and a forward P of 37.04. The CEO, Doug McMillon, has continued to do a great job, and I expect this stock to continue to climb higher. And it also has a dividend yield of 1%. So Walmart is an excellent long-term investment and a great way to diversify your portfolio. Josh DeLozier Investments has a strong buy on Walmart long-term, and we advise just dollar cost averaging in Walmart, and it is a stock that everyone should be happy with long term. You can't go wrong with Walmart. Next company, Costco, ticker symbol COST. Its current trading price is $990.21 a share. Costco continues to show strong top-line growth driven by its membership-based model and value-oriented product mix. The company's expansion into e-commerce and international markets support ongoing growth. Costco's membership renewal rates remain industry-leading, underpinning predictable revenue streams. The company benefits from strong brand loyalty and a focus on high-quality private label products. Costco's operating margins are among the best in retail, thanks to efficient operations and limited SKU strategy. The company consistently delivers double-digit earnings growth with robust free cash flow generation. Costco continues to have continued expansion of warehouses, especially internationally, and investments in digital infrastructure are key. Costco's focus on value and efficiency positions it well against inflation and shifting consumer habits. Costco's earnings per share is $17.63. Its P is 56.17 with a forward P of 54.56. So not expect to have a whole lot of growth here in the next couple months. But, I would still continue to advise, buying shares, it's dollar cost averaging, just like Walmart. It's got a dividend yield of 0.53%. CEO Ron Vakris has recently became CEO in 2024. So he's been there 40 years, knows the company well. Josh DeLozier Investments has a strong buy on Costco at $9.90 and 21 cents a share because of its long-term upside, not really worried about how much this company should make in the next quarter or so. But long term, Costco has a nice moat, and Josh DeLozier Investments has a strong buy on Costco. The next company, Carvana, ticker symbol CVNA. It's currently trading at $297.40 a share. Carvana has rebounded from prior operational struggles, benefiting from continued shift and online car buying. The company is streamlining from its logistics efficiency. It's continued to improve there. Carvana's asset-light, digital-first model gives it a structural advantage over traditional dealerships. The company is leveraging data analytics to optimize inventory and pricing. Carvana has narrowed losses, and it's approaching profitability with improved gross margins and reduced CG&A expenses. Revenue growth has stabilized, but the car market remains highly competitive and sensitive to interest rates. Carvana is focused on operational efficiency and market share gains in key metro areas, and continued investment in technology and customer experience is crucial for long-term differentiation. Carvana's EPS is now $2.85 a share, with a P of 104.17 and a forward P of 63.88. Carvana has tons of room to go higher, and we should continue to see this stock continue to climb in price. Its CEO, Ernest C. Garcia III, has done an amazing job. And Josh DeLozier Investments sees Carvana as an excellent long-term investment. So if you're not invested in Carvana now, definitely take the time to consider investing in it. Always do your own due diligence. But anytime Carvana falls 5%, Josh DeLozier Investments, makes an investment in Carvana. And Josh DeLozier Investments has a strong buy at $297.40. The next company, number 5 on the list, Blackstone, currently trading at $136.41 a share. Blackstone remains a leader in alternative asset management, benefiting from institutional demands for private equity, real estate, and credit products. The firm is well diversified across asset classes and geographies. Blackstone's fee-related earnings are resilient, with significant dry powder to deploy in opportunistic investments. The company's scale and reputation provide access to exclusive deals and co-investment opportunities. Blackstone has consistently delivered strong returns on equity and robust dividend growth. The firm's asset under management continues to hit new highs, supporting long-term growth. Focus on expanding into new asset classes and geographies, and continued emphasis on ESG and sustainable investing to attract institutional capital. Just taking a look at Blackstone's EPS of $3.30 a share. Its P is 41.27 with a forward P of 27.50 and a dividend yield of 2.97%. Blackstone should continue to climb higher short term, and at $136.41, Josh DeLozier Investments has a strong buy on Blackstone. Its CEO, Steve Schwartzman, is one of the best in the business, and I have full confidence in Blackstone to continue to climb higher. So, Josh DeLozier Investments will continue to invest in in Blackstone. This is a great company to diversify your portfolio. And this stock should be back over $180 a share sometime between Q3 and Q4 of 2025. So those are the 5 stocks this past week that we did analysis on, and we have a strong buys on those particular companies for the next 3 months. Each stock presents a unique risk-reward profile. GameStop is speculative with turnaround potential. Walmart and Costco offer stability and growth. Carvana is a disruptor with execution risk. And, Carvana should see 100%, should double in value within the next 12 months as long as inflation remains under control. I thought I'd just bring that up. So, if there's one stock you have to select on this list, select Carvana. And Blackstone provides exposure to alternatives and boom. And always align your investments with your risk tolerance and goals. If you found this analysis helpful, subscribe to Josh DeLozier Investments for more expert breakdowns. Drop your questions in the comments below. Thank you all for watching this week.